Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor. You can find him online at stevesaretsky.com. Welcome back to the show, Steve.
Thanks again, Jim.
Steve, we don't want to get into the politics of the announced public inquiry into money laundering, but what ramifications could this inquiry have on the housing market?
I don't know. I think in my opinion, it's more so just a confidence thing, right? I mean, obviously, if you're just a local citizen competing in this market, looking at the mountain you have to climb to get into the housing market, and you come out and you hear that the figures are $5 billion laundered in real estate in 1 year, whether, they're fully accurate or not, I think really kills the confidence, really, in my opinion. Like, nobody wants to feel like they're sort of being cheated or, on an unfair advantage, right? So, I can see people certainly being like, well, if they're going to clamp down on money laundering, how much of an impact is that going to be? And again, like, whether or not they're going to be successful in clamping down on money laundering, how do you actually enforce it? Do they have the manpower to do it? How accurate are these figures, et cetera, et cetera? But I think ultimately, in these financial markets, it's really just about confidence. And so I think from more than anything, it's just a confidence thing.
Well, aren't all real estate agents supposed to fill out a FinTrack form and hand it in, or do they have to hand it in?
Yeah, you have to fill out a FinTrack form, but it's really, I don't want to say, I mean, how do I put this politely? It's basically a formality, essentially where you take your client's driver's license, you write down his information, and then you're sitting in front of the guy and you have to check if he's a low risk or a high risk client. So I'd imagine most realtors, if you're writing this up in front of your clients, aren't going to voluntarily check off that this client is high risk. Probably not a good way to build a client relationship and grow your business. So really it's, I think I look at the FinTrack as a formality. The fact of the matter is, even if you were to say check off high risk, circle this guy's red flag, my understanding is it basically just goes over to FinTrack and ends up in a box in a warehouse somewhere.
So they really could go and start digging into these things. They don't have to do anything new. The information should be there.
Yeah, I think the information is there. It's just that, from my understanding, is FinTrack doesn't have any staff to actually go through the paperwork and actually do any enforcement. So, I mean, even if the realtor was to write, what they thought about their client, I mean, is anyone actually going to go out and take this and investigate it, or is it going to end up in a warehouse and everybody's just collects their paycheck and goes home, right?
Could the public inquiry make the downturn in high-end Vancouver housing markets even deeper?
I think, at least on the surface, that would be the obvious conclusion I think people would jump to. We've seen the speculation tax, foreign buyer tax. You've seen now they have the beneficial registry that's starting up this year. So obviously a lot of these are geared towards the public perception of foreign money in the market and, how that's really driven up the home prices. So I guess that would be your logical conclusion. We'll have to obviously wait and see what happens. But I think, whether or not you can pinpoint it to that, generally housing corrections are the most severe at the high end of the market, as opposed to the low end. You just have to look to the U.S. as a prime example.
Is this public inquiry likely to get blamed for a housing market downturn that's already in motion?
Yeah, my thought process on that is that I think I look at it and say, it really is politics at the end of the day, right? It is about getting elected and staying in power and appeasing the people that, who voted you in. I look at it and say, okay, well, you have these sky high home prices, you have this, egregious affordability levels, that, in my opinion, the NDP has essentially created the air cover to do what they need to do to the market. So, i.e., if home prices were to, say, crash across the market. So, yes, we know the high end, plunged 35%. Let's just say your typical condo follows the same path, and across the board, you basically have a 30% housing market downturn. I think the NDP has created the air cover to say, well, this is a result of illicit money laundering in the market. We took the steps to enact the law, and this was the result of enacting the law. And so I think it's a lot easier politically to digest that and say, well, home prices plunged, the economy went into recession, but, it was because money laundering. So I think, in my opinion, at least, they've created the air cover. Whether you agree with the policies or not, I think that they've certainly created that air cover to create potential more severe housing downturn and potentially get away with it.
We'll have more with Steve Saretsky right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're talking with Steve Saretsky. Steve, what's likely to happen to pre-sales as the housing market continues its downward slide?
I don't know. That's still one of the most fascinating aspects of the market, in my opinion. I mean, you can sort of see some of the news stories coming out in Australia, parts of Sydney and whatnot. You're seeing some developments halt mid-construction. So you see like condos, basically, concrete condos halfway up, halting construction. You're hearing appraisal values not lining up with what people paid at the pre-sale centers. And, in my opinion, of course, nothing is set in stone, but I do think it's an extremely vulnerable part of the market where the reality of it is the pre-sale prices, particularly over the last, 2 to 3 years, were, grossly inflated above market value. So people were basically paying, I would say typically about 20% above market value for pre-sale, but the notion was that prices would continue to rise, and by the time the unit completes in 2 years, the market would have gone up, that 15-20% that you needed it to in order to get the mortgage financing. But the problem is not only the market is now correcting, condo prices are coming down, probably about 15% across the board. So these people that paid too much for their pre-sale that are maybe going to complete, say, next year. If the market doesn't recover, the bank basically will appraise the unit when it comes to completion. So the bank's going to say, well, you paid $600,000 for the pre-sale center, but we really only value it at $550. So we'll give you a loan on our assumption that the value is $550. And so there's going to create that shortfall, right, where buyers are going to have to start to scramble and basically come up with extra down payment money. And that's going to be certainly a problem for some people trying to get that money.
Well, what happens to the deal they signed? Are they still responsible for that overpriced thing that they agreed to?
Yeah, so what happens is generally, it depends on the developer. So what happens is a lot of the times is they might give you a little bit of grace period to try to recoup the money, and if you can't come up with it, what they'll do is they'll basically take the unit back. They'll keep your deposit. Generally what they do is they sue for specific performance. So if there's essentially, it's the last thing a developer wants to do because obviously it's a long, drawn-out process, but If they have to sue for specific performance, they'll basically ask you to cover the difference of, whatever the price you agreed upon. So let's say you agreed to it for $600,000 and they have to resell it for $550. Well, they want you to come up on the hook for basically that difference in value that they had to basically lose out on.
What does that do for consumer confidence in the market if developers start doing that? And could a developer say, well, we'll rip up the original agreement and do it at a lower price? Does that ever happen?
You're starting to see, it really depends on how well funded the developer is, to be honest. If you have a bigger developer, they obviously have more workarounds where they might try to cut you a bit of a discount. But they have to be very, very cautious, because if they start cutting one guy a discount, then, and that gets out, then everybody in the building wants a discount. So, honestly, a lot of the times the developer's hands are tied. That's why you're seeing now is, if you look at the pre-sale market, they might have sold, say, 50% of the building at $1,200 a square foot, and now they're trying to sell the remaining, 15% that they need to get to hit construction financing. And they're offering all these bonuses, decorating allowance, realtor bonus, all these bonuses, but they can't really cut the price from $1,200 a square foot. All they can do is add bonuses, because as soon as you say, okay, we'll sell the final 15%, at $1,150 a foot, well, now you've just basically screwed over everybody that paid $1,200 a foot, because now, again, when these guys have to pay their next deposit, or they have to go and close on the pre-sale in a year, the bank's going to say, well, you guys paid $1,200, everybody else paid $1,150, so we're going to say that the value is $1,150. So you just create a lot of financing difficulties down the road when you start doing those discounts.
Are developers a good barometer of the housing market?
Yeah, I think so. I think that, I think they're obviously moving a lot of capital around. So you could say that these guys are generally a fairly good inclination of, hey, if they're pulling back on housing starts, what does that tell you? So they might, publicly say in the newspaper, that the market is great and that prices are going to continue to rise. And I certainly don't blame them. Obviously, when you have tens and hundreds of millions of dollars riding on the line, you probably want to have a more optimistic view of the market. But then at the same time, they're saying that, and then meanwhile, the housing starts are coming off by 10, 15%, or land acquisitions for new land are dropping off. That's generally kind of contradictory to, what they're telling you. So I look at developers as sort of a bellwether in terms of, I guess, overall confidence in the market, because generally by nature, they're pretty bullish and optimistic people.
Now, of course, with everything going in cycles, if they build less now because there isn't a big market and they don't acquire more land, what's that going to do to real estate in 3 or 4 years? Because obviously we still have tens of thousands of people moving to the lower mainland every year.
Yeah, so that's typically what we see, right? Is that's generally how these housing cycles play out. They always play out the same, just a matter of how much is the correction. But generally you have demand start to ramp up, prices start to increase, and so developers, it's a lag time. The developers react to that increased demand by then going out and purchasing land and trying to get permits in and start developing. So they're lagging to that. And then obviously as the market basically teeters out, it can only go up forever. It doesn't go up in a straight line forever. As that demand starts to filter out, that's when all of the supply usually starts to come on. So usually the supply, typically in a housing cycle, the supply usually comes on at the worst time. So as the demand falls and the inventory is rising, all of a sudden you get all the new inventory also coming to the market, and that just puts more downwards pressure on the prices. Of course, that's when the developers pull back. And then basically as you bottom, the inventory starts to decline again because you don't have this pipeline of new supply coming in like you used to, and that starts to increase your next upcycle, right? So it's all cyclical, where the next cycle basically is once again started by an increase in demand and a shortage of housing supply to basically start the next cycle. So I suspect that will again be the case. Will it be 3 or 4 years? Will it be 6 or 7 years? It's hard to say, but these are typically how these patterns go.
Is there any way to time out the bottom of a housing market?
I don't think you can really time the bottom. I mean, I think any astute investor will tell you that. I mean, obviously you can try to get as close as you can. I always just tell my clients, it's where do you see the value? I mean, obviously there's indicators that you look for. What's the direction of sales and inventory going? Is there a mismatch there? Like right now we have falling sales and rising inventory. So clearly, in my opinion, that spells further downwards pressure on the prices. But, I mean, I'll always go back and use the analogy and look at the U.S., right? And so not to say that we're the same, but if somebody had bought, say, in 2010, they're probably going, oh crap, because the prices actually kept falling until 2012. And they bottomed in 2012. But realistically now, if you're looking at it now in hindsight, if you bought in 2010, you've probably done tremendously well. So you can't necessarily time the bottom, but, I think you can get somewhat within a decent range.
Does it make a difference if you're buying as an investment or buying because you just need a home?
Well, I mean, I think there's different trains of thoughts. I think that just because, you're buying to live in for the next 10 years, I think a lot of people would say that doesn't mean they still would be happy paying peak price. So certainly if you can see some indicators that suggest frothiness and that the market's going to correct, then you can try to avoid that speed bump. But, I look at it still at the end of the day, it's like realistically, if you overpaid, it could take you 10, 12 years to get back up to the level where you need to be. Inflation generally takes care of that. But yeah, again, there's different trains of thought. I mean, obviously the old adage is, you can't time the market. If you're planning to live on it, just buy it and sit on it. So, I mean, if that's your strategy, then by all means go for it.
And right now, too, people, I guess, have to make the choice. Do I rent or do I buy? And is this, it seems to me the rents are still going up and yet the real estate prices are coming down. How do you make that decision, rent or buy?
Yeah, so I mean, I would actually counter that. I mean, if you actually look at a lot of the data and speak with property managers, the rents have eased off. So, for condos, they've basically been flat for years. They peaked out probably early 2018. There really hasn't been any movement in rents. Detached rents are actually coming down. So if you're looking to rent a single family house, those are coming down. I think a lot of that has to do with speculation tax, but probably a lot too with the economy slowing down as well. So yeah, I mean, it really just comes down to your comfort level. Obviously, some people want to have a place that they can call their own and raise their family in and not have to worry about getting kicked out because the guy wants to sell. So I mean, there's pros and cons, obviously, but yeah, I do think that there's this sort of myth that's been going around that because home prices are falling, and because this mortgage stress test is keeping people out of the market, that it's going to create all this rental demand, and the rents are just going to shoot up and rise exponentially, and we should remove the stress test because of that. But it really is just a complete misnomer. Again, you could have made that argument in the States that everybody was losing their homes going into foreclosure, then surely that would spike the rents. But again, if you look at the U.S., the rents actually fell, just because the rents are more so tied to the labor market than they are, the housing market. If people don't have jobs, if their wages aren't growing, if migration starts to slow down, basically part of the housing phenomenon too is what you see is in a housing boom, people don't necessarily use housing to its best use, best fulfillment. Like you'll see a lot of empty homes because like people are speculating, there's a lot of flipping activity going, there's a lot of turnover, so you get a lot of like empty homes that aren't actually properly used. But then what you start to see as the downturn starts to weather, people can't flip their homes, so they go, well, I got to stem the bleeding, so maybe I should rent this out for a bit. So And then, of course, the new supply also comes onto the market at the same time. And so that's always why you see vacancies start to rise and rents start to ease at the end of a housing cycle.
We'll have more with Steve Saretsky right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, what's happening to the commercial real estate market?
I'm not actively following the commercial side too much. I know that it has slowed down a little bit, not so much in the industrial space, but I can speak more specifically for commercial land sales. So basically developers acquiring land sites for the purpose of developing residential housing. That has slowed off significantly. So if you look at Q1 data for 2019, the number of land sales dropped off by just over 50% in the first quarter from last year. So I think it was for the Q1, it was actually the slowest in over 5 years. So that's basically developers, in my opinion, highlighting that land prices are arguably too high. And that's what I'm having conversations with developers. It's pretty obvious, right? The land prices, people are still demanding peak prices for land, and the pre-sale prices are dropping. The condo market is softening. The developer has to be very cautious. The numbers have to work. And so today, based on the high cost of land and the high cost of construction, and the really soft condo market, these numbers simply don't make sense for developers. So that's why you've seen a huge drop-off in the land sale.
Is Australia's winter real estate market an indication of what we might see in Vancouver this winter?
Obviously hard to say. I think they're totally different markets, obviously, but I think they are going through corrections basically at the same time. I think that they certainly appear to be further along based on the reports that I've seen, with, condo projects, halting mid-construction, appraisal values not coming into line, and they've had a pretty nasty credit contraction there. So I think they're a little bit further along. Again, obviously they are heavily impacted by Chinese, capital flows, and, very similar to Vancouver, I guess, in that aspect.
Steve, thank you so much for chatting with us.
Always a pleasure. Thanks for having me on, Jim.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. You can find him online at stevesaretsky.com. If you have any questions for Steve or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.